Hello, everyone. Hopefully you're having a great day. My name's Andy. My channel's Finding Value. And what I do is I scour everything looking for investment opportunities. And I look at all the sectors. There's an amazing opportunity in commodities. We've broken everything to the upside. CRB index, a lot of the commodities themselves, platinum, silver, gold, they're all putting in massive patterns. Join this channel, join our community, click subscribe if you guys are interested in watching the most undervalued investment opportunities kill it over the next 5 to 10 years. So technology, and we're going to do some technical analysis of technology and maybe some other companies. I just threw some in here. If interest rates are going down, and I made the claim that if yields go down, technology will go up. So it'll do opposite of whatever yields do. And let's test that theory. Why not? Let's test it. So let's look at some charts and test that theory. So let's look at technology and other. We're going to go right into the charts. Again, this is not financial advice, only financial education. Do your own diligence if you're going to use any of these companies. So this is the 10-year yield, the uptrend line. We broke the uptrend line to the downside. People are buying bonds, or someone's buying bonds. It could be the Federal Reserve. I don't know. But someone's buying them, and they broke the uptrend, and we're heading lower, possibly. We look at Roku. It broke its downtrend line to the upside, just like the 10-year yield. So is this going to continue? I don't know. I'm a commodities guy right now because we know they have insane chart patterns and all that stuff. But if yields go lower, these should go higher. The trade desk is still trading in its downward channel line, so that has not broken out yet, and it still looks pretty bearish. We do have a nice move higher off this bottom, but we got another kind of bearish engulfing there, which could be a short-term pressure down. Tesla. I wish I liked Tesla. Not their products, but the company itself. I just don't know if they can make any money. You take the credits away, I don't know how they don't make any money. But here they are moving sideways in this big pattern. It looks like it's holding at the moment, so we'll see what happens. If rates go lower, this wants to go higher. If rates swap and turn, watch out for the downside. That's where you should be looking, at 10-year yields. Apple is hugging the bottom rail. Hit the rail and hugged it, came up, came down, hugging the bottom rail. Usually when you hug the bottom rail, it wants to break to the downside, which means rates are probably going to go higher. We'll see. We'll see what happens. I don't want to do predictions. Let's look at what the market's telling us. It's saying that it's hugging the bottom rail, a likelihood of breaking to the downside. And if all these tech companies break to the downside, you're probably going to have higher rates. That's my guess. SunPower looks like it's trying to break through its downtrend line. Lower rates, coming back. And we'll see what happens. NextEra Energy looks like it's mustering up a little bit of energy here. Maybe it's getting plugged into the grid, getting some power. But if you look, 2 big up days, the small pullback, it could want to try to go higher. Where I'm not convinced is I am convinced that rates are going to have to go higher at some point. That's why Yellen slipped out. Well, maybe higher rates is good for the economy because they're not going to be able to control it. That's why. And they know that a real estate expansion phase is coming, which is inflationary, which puts pressure on rates to go higher. And that's why she slipped that out there. So I'm not convinced that if this trades off interest rates, NextEra Energy, I mean, that's kind of what it looks like. It's going to go downward if rates go higher. So we'll see. Canadian Solar looks like it's breaking out of its downtrend line. Its pattern looks pretty strong from this base. Doesn't look too bad. Is this dependent on interest rates? Maybe. I don't know. I don't know the solar sector as well as all the other sectors. It hasn't been around long enough where I really know how this correlates to interest rates. But I would assume that because a lot of these are priced off of a bunch of future growth, that interest rates do and play a large part in the valuation of the companies. And if rates go higher, I would think that this is going to go lower. It's all dependent on interest rates. This is Gamesa. Obviously, it broke to the downside of its support line. It doesn't look too hot. We could see a large move lower. If we see a large move lower and you're part of this channel, we will watch it bottom out. We will buy it, and we will own wind energy companies at a very low price when it does bottom. Eventually, it's going to take some time. AI, C3, this C3 company, artificial intelligence. I think, again, this is in a very strong downtrend here. I think we have a little bit longer to go. If you were to kind of see what Elliott wave, this is like the move lower that I've seen on all these companies. It pulls like one of these. It goes sideways. You'll see one big up day, kind of a sell-off after it, pull down for the end of the C wave, and then move higher. It kind of looks something similar to this. This one's Planetary Technologies. You get this move higher. It does this bowl shape, and then it runs down. It does like a hump, and then it goes one big up day, and then it kind of leaks off. So I think it has some more time. Open Door looks like it's breaking its downward channel or trend line, downward trend line. Pulls up, kind of back tests, and then we'll see if this thing goes higher. Not too bad. Zillow Group. Is this a head and shoulders topping pattern? It sure looks like it. Shoulders over here, the head, then the shoulder. It completed this, and it may come back even more. We'll see. Could be a head and shoulder topping pattern for Zillow. So what I am going to say is highly dependent on interest rates. Interest rates affects a lot of things. It'll affect certain companies differently. In technology, remember, they're growth. Growth means future. They're dependent on growth in the future. The more growth you have in the future, and when interest rates go higher, it's going to be discounted in net present value with higher interest rates, which is going to push the PE ratios way down. It's going to spark a decline in technology. So if we have an expansionary phase in real estate, which we're in right now, we're just starting it. If that continues and we have strong housing starts, I think that's going to be inflationary. If it's inflationary, we're going to see higher interest rates, I think. Higher interest rates is a complete headwind for these companies, and I think we'll see moves to the downside eventually. Some of them on the short term look pretty good to move on up. That's what it looks like. That's what I see. That's the market. That's right in front of us. If you guys like this content, give me a thumbs up. Put questions and comments below if you have any. And thank you for listening. This is Finding Value.